All right, Ben, welcome back to Face, my trading warrior brother.
Hey, Dale, great to hear your voice. Happy birthday, Blake.
Thank you so much, my friend. Really appreciate it. Sorry, I had already
You're
hit
going to
hit
make him
mute.
cry.
No, we don't want to
Thank
do that.
All
Thanks.
right,
I'll
so
be
Ben,
listening in, Ben. Thanks for being here. All right, see
so
you guys.
Ben,
Appreciate it.
go ahead. Let's look at what the Epoch Cycle is saying. Great to have you back for an update, and we're really in some wild, wild times. I'm interested in what you have to say today, so I'm going to be quiet for a while.
Appreciate it, Dale. Yeah, it was funny. I was listening to you guys talking, and the revision of those unemployment numbers is a perfect example of what we've been talking about for a couple of years now with the Epic
Yeah,
cycle, right?
yeah,
The net effect of events like that is it just erodes the confidence, it erodes the trust in
yeah.
institutions that we once thought, not 100 years ago, but just a few years ago, we thought was pretty unassailable. And so, that's a perfect example. And we're going to go through a little more of the epic cycle stuff. The theme of this presentation is, I believe the proper metaphor right now is we're leaving the eye of the storm. So
Okay.
a couple years ago, we were sort of entering the storm, right? Stuff started to happen. The market started to correct. We saw big sell-offs. We saw, stuff we hadn't seen in years since like the COVID crash. The last couple years, it's been very good for risk assets. It's been sort of this free for all, and really big moves in risk assets and darling stocks, the Mag 7 and things like that. So it really didn't fit with being in a storm, but I think it was the eye of the storm which we're now leaving and sort of entering back into the storm. And the reason I say that is cyclical, right? It's simply the cycle work, and we'll go over that. I see it as a major shift. I think we are shifting from slow growth or good growth to no growth slash recession. I think that's in the cards. The emotions are shifting from this greed and sort of aggressiveness to more of fear and insecurity, and these sort of dominant themes are going to be lasting for a couple years. All crises are, at least financial crises, are related to debt and debt liquidation. I think we're moving into a period where we're going to start to see debt liquidation, which of course equals crisis, and that also is going to bring in and usher in change. Some of the change you were talking about, Dale, like the decentralization. The biggest area I think that why this time is going to be different. Remember, the cycles are not exact replicas. They're sort of related. You see they're a little different. They're a little nuanced. The same sort of themes, but they manifest in different ways. I think sovereign debt's going to be the big issue this time. Last time we had mortgage debt and real estate debt. Before that, it was the oil patch and savings and loans. And so every time it changes a little bit, but the main thing is that you get debt liquidation, which creates the crisis and brings about change. And I think the roller coaster is right near the top. I mean, we are the last few chain links, when you're riding those old coasters and you hear the chains click, 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 clicking. And when the chains stop clicking, you're sort of in that suspended animation before you head down. I think that's where we are. And then we'll go over some markets as a way to play some of these themes.
Well, great being on a roller coaster with you, Ben.
I love roller coasters.
Uh, uh, Interesting. A lot of people have been talking sovereign debt. Bonds have been actually acting okay. So this rally might be the last window. It could even go to TLT, maybe 120. Maybe that's optimistic, but 109 is doable. That this is a four from people I've talked to. Okay. It's not going back to where it was. We're not going to 170 TLT,
Right.
where it was. So that would mean that, wave five probably is when things come home to roost after this bond rally terminates. They're probably the best short on the board.
Well, listen, you and I have been talking for the last couple of years, and I've been bearish on bonds, but in this presentation, I'm showing we're in a counter trend rally, and there's a
Right.
good move. Like on the 30-year, I think we can go to 135 and change, 133. So there's a
Okay.
decent move coming. So I agree with you.
Yeah. Okay.
Um,
So,
it's my premise now, based on the cycles and the timing, that the next act has started. We've already seen. I was expecting sort of second half of the year, and then we get second half of the year, and we get a Trump assassination attempt. We get a sitting president not running for re-election, which is a very rare occurrence in this country. So the outliers and the chaos is beginning, and I think people can feel it. Um, we're gonna go over the epoch cycle effects. We talked a little bit about it with you, Dale, already with those unemployment revisions. No growth with elevated inflation. That's not a good recipe for risk. The U.S. election is in 76 days from today.
well, let
Um,
me ask you this: Are you and your family going to be in the bunker?
no, I don't have a bunker. I got a lot of physical gold and physical silver, but no
Uh,
bunker yet.
uh,
Um,
I mean,
I do have a
I just
shotgun. I do, I
all
was
right.
a hot.
I'm not joking.
No, I agree. You have to figure, have a plan for protection for sure.
Well,
I'm
you
not a
know what
prepper.
the a plan is? I heard Doug Casey the other day. You know him, right? He was
Yeah,
famous in the 70s, crisis investing. He's
right.
still around and he's
Wow.
smart. And he said, people in Rome, when they saw it starting to fall apart, there were smart people. They got out of Dodge.
Hmm.
All right. In China, uh, during the right before the revolution, they get out of Dodge.
Sure.
Cuba before Castro, smart people got out of Dodge. And I really believe most of people I talk to are pretty smart people, and I don't know many people getting out of Dodge, even though they see this coming.
Yeah, it's well, my
It's hard to do. I'm
my
not saying
in-laws
it's
are in
easy to
Nebraska.
do.
That might be a good place to go. So we'll see.
All right. Anyway, I'm just, you know,
Yeah,
guy
yeah.
guy has wisdom. So you could diversify all you want financially, but if you're not diversified politically, it probably won't matter.
Yeah, it's going to be trouble. It's going to be
Okay,
trouble. So
anyway,
we
that's
have
a gloomy.
76 days to the
Just
election.
wanted
That's
to cheer up your forecast a little bit here.
yes,
Okay,
we got
go ahead, buddy.
76 days. It's right here. It'll be here before you know it. The
Yeah.
interesting thing too, this next one, Dale, is something that just a few weeks ago we passed the anniversary of when Nixon took us off the
Okay.
gold standard. It was August 15th, 1971. And we went from sort of hard assets to paper assets for the last 53 years. And I think we're heading back to the cycle of hard assets again. And I don't just mean of people buying gold and silver and real estate and tangible assets, but where the governments and the sovereigns and the way we create and sort of validate money is going to be through hard assets. Maybe it's gold backing, stuff. The BRICS are talking about doing that. Could be oil or other commodities that countries have. They're going to back it. But I think there's a shift that this era of paper assets is ending that are dominant, and we're going to be moving back to the hard assets mean something. Uh,
Interesting. The dollar broke down. I don't know if you think it has to take out par or not, but the dollar broke down a week or so ago on the anniversary that you're talking about,
yeah.
from Nixon taking us off that Bretton Woods agreement.
And I'm going to talk
So
about that. And you were spot on that. I was expecting the dollar to break up out of the triangle, and it has broken down, and you can't deny the breakdown. So it's time to look, south on the dollar on bounces and see if this
yeah,
is like Blake. I said, oh, maybe this is a fake out. Maybe this is, the tricks that these guys play before a big move. It's still possible, but I think, we'll review the dollar on the chart. But I
okay,
agree
buddy.
with you. I think it's a big sign.
I
And then
think the
lastly,
pendulum. Go ahead.
I want to go over the 1968 analog. You like these, Dale. This one's
Oh,
pretty
the DNC in Chicago.
unbelievable, man. You wait till you see the slide with all the parallels. It's crazy.
Oh, I
Absolutely
was out
crazy.
there with
The
out there with
protesters?
Jerry Rubin and those guys. I was out there. No, I
Wow.
wasn't. I was home watching a Cubs game.
You were too young.
Anyway,
You were too
huh?
young to be out there.
No, that was high school.
Yeah.
That's how old I am. Anyway, but yeah, I'm not a big protester. It's not. I prefer to be comfortable.
There you
Having a
go.
brewski, yeah, very probably, yeah. Coors was a big treat when you lived in Chicago. People used to pack Coors in their suitcase when they went to Colorado and
Yeah,
bring it
they'd
back.
bootleg it back from
Remember
Colorado.
that, man?
Yeah, I
Yeah.
do. I
Oh,
absolutely do.
all right, let's get back to it, or we'll never. Oh, look at that. Confidence in institutions. Yeah.
Yeah, this is sort of the epic cycle effects and I found these charts which I think perfectly illustrate what I've been talking about, on your show and your interviews for years now, that these things, it's a bigger cycle. So, everybody that was looking for it the next week, may have dismissed it, but you can see the trends, right? Here's just the confidence in major institutions.
Yeah.
It's collapsing, and it has not shown a sign of buffering either.
I don't know
Um,
what to believe anymore. I really, I, you know,
it's really difficult. It's really difficult.
I,
This one, I like this chart a lot because this table, because it shows where we are compared to the all-time lows with confidence in each of these institutions. And look at how many of them are 2022, 2023 as the low.
yeah,
And it's across the
wow,
board, right? You can't say, oh,
yeah,
this is a right wing thing, this is a left wing thing. It's everything.
yeah.
And then the last one, the last slide related to this is an interesting one too. It just shows year to year, last 3 years, what's been happening.
Yeah.
So the reason why we talk about this and the reason why it's important is because it's going to affect people's confidence and it's going to affect people's decision making. And that obviously affects asset prices. Now, the counter trend narrative that we get from governments and authorities is all is well.
Oh, yeah.
Nothing's wrong. It's a conspiracy theory. It's this, it's that. That they have to do this because they can't acknowledge that they're losing control and they're losing people's confidence. But all is not well. And I think in our bones, deep down, everybody knows it. Even the people who want it to be well know it. So let's shift from, okay, this is how people are feeling. Let's go to what's the economy doing? Would you buy or sell this if it was a stock?
Yeah. Nice. The bigger the base, the bigger the launch into space.
Absolutely. I mean,
That's a nice base.
this is a bullish chart, and this is
Yeah.
the unemployment rate.
Yeah.
So we can
It could at
expect to,
least correct, or at least there's a bounce coming. And it looks like it's turning up here.
yeah, absolutely, absolutely.
Okay.
So that's a tell on the economy.
You're fired, Ben. The chart just went up,
And
just
here's
upticked a
inflation.
little bit.
Here's inflation, right?
Yeah.
Everybody that there's an interesting thing.
We
People
beat
say,
it.
"Oh, inflation is done. It's
Flip it
2.9%
now.
year over year." That
Yeah.
doesn't mean prices are coming down. It means they're just rising more slowly.
Yeah.
And that's what people
All right.
don't get, is that it doesn't mean we're going back to the prices we had,
Right.
pre-pandemic.
We've slowed down the acceleration of a huge burst that
That's
will
right.
never get. The only thing that would take it back down there would be
A
a
depression.
very severe recession slash depression,
Yep, that's
where
right.
demand just goes away for everyone because everyone's broke.
Here's an interesting one on inflation, Dale. You'll like this one. I think we've experienced this part here,
Yeah.
right? We had the spike and now we're
Yeah.
moderating a little bit. But
Yeah.
look what's coming if this cycle
Yeah.
repeats.
Right.
And
It's on
inflate
steroids
the
next
key
time.
thing to notice, look in the early 70s, inflation never went back to where it was before the
No.
inflation cycle started.
No. never.
And this may be, the figures may be accurate too. A little over 3% here. We're around 3% now. Maybe that is going to be our bottom. We'll see. We'll see. The outlook basically though is weaker economy without having inflation come down much from where we currently are.
And it
Now,
didn't come down until the highest green bars. And that was when Volcker came in and was draconian. And it still didn't take it back to 64 levels. But
no.
it sure felt like things got cheap. I was
Yeah,
around.
it's all relative, right? Now,
Yeah.
I'm not great on predictions, and trying to be a predictor in the market is a recipe for losing your money. But the next slide, I'm gonna show you my prediction for the election results, right? For the presidential election. There it is.
We
No
don't have
matter
one.
no matter
Yeah.
what happens,
Yeah. Right. I
we're
know.
going to be a fractured country.
Right.
Whichever side loses is not going to either they're not going to accept the results or they're not going to
Right.
accept the person that got elected as their president. And
Right.
that's a problem.
That is a problem.
And that's a problem. So
Okay.
that's something else we're going to have to deal with. I don't know when the market's going to start pricing that in. I don't know. I think the market doesn't know. And the interesting thing, if you look at a lot of the charts, like the longer term charts, there's so many of them that are triangulating. And they're triangulating because they're building up energy for some big move and some big event. I don't know what it is. I don't know when it's going to happen, but it's in the cards. And
You mean
maybe
like
it's
WTI in a big triangle, things like that? Is that what you're talking about?
WTI. The dollar was in a triangle. Bonds
That's
were in
right.
a triangle.
Right.
Um,
Okay. Yeah.
Nat gas is in a triangle. Coffee was in a triangle. Copper was in a triangle. Gold broke out of a triangle already.
Okay.
That was the big move. So it's in the charts and it's coming. This is an interesting chart I saw. You may have seen it. Somebody posted it on Twitter. Global debt reached $315 trillion this year. And this is it. This is government, private, just total debt. It's not sustainable. The average percentage weight of GDP is now 333%. So something has to give. That debt is not going away. So they're going to something. They either have to inflate it away, they have to tax the living crap out of everybody to pay for it, or repudiate it.
Which do you
Because
think they're going to do? Maybe they try all three.
maybe I definitely think inflation is going to be a part of it. Definitely think inflation. Let's talk about the paper to hard assets. The reason I like to show this chart is we are also in a war cycle, which we've talked about in the past,
Yeah.
and wars are very inflationary and very good for hard assets. And you can see this is going back to the Napoleonic Wars and the War of 1812. We get a spike every time.
I got short after that.
It was a good sell.
I that was my Waterloo trade.
You must have had the faster horse, right? You got short before everybody else.
No, I actually I was riding in a coach, like I told you before.
The
I
royalty.
like comfort. So anyway, yeah, that's so there's China's rise. Okay.
Yep.
All right.
Let's go. What about ports in the storm? Interestingly, I really think this chart is very interesting because commodities, everyone says, oh, well, when growth slows or we enter a recession, you got to sell the commodities because demand is just not there, right? And that is true. It happens. But look what happens after you're in a recession.
Yeah.
The commodities actually rise.
Yeah.
As long as
Interesting.
demand is not totally destroyed, I guess you kill enough supply to where these things do pretty well. So I think these hard assets and commodities are a good place to hide, if you buy them at the right time.
I heard it told this way that we're going to have deflation in the things we own and inflation in the things we use.
Oh boy, that's a double whammy, huh?
Yeah. So then you're talking a bear market in real estate and
Mm-hmm.
stocks,
Mm-hmm.
and the grains might bottom someday. They're the thing that's been keeping people are complaining about food prices with where grains are now. Anyway, that could be it. So
Yeah.
your net worth takes a huge hit, but your cost of living goes up at the same time.
Yeah, that's tough. That's a tough combination.
Is
And
that
and
what
the
you
other,
see?
yeah, yeah. I mean that I think that's a real possibility. The other thing here is everyone is calling for rate cuts, right? Oh, we need rate cuts. Give us rate cuts. We want the rate cuts. The Fed needs to cut. This chart says be careful what you wish for because when you start cutting, the risk markets have trouble. And on average, given all these different cycles, if you look at this chart, this is a good chart. On average, the low in risk assets, or the S&P 500 in this case, arrives 62% of the way through the cycle. So from first cut to last cut, you take 62% of that time, and that's when you bottom out. So this
Okay,
this
I heard Grantham say that once they start cutting, the market doesn't bottom for 6 months.
well, there you go.
I don't know if that means the same thing, but 6 months would take you from here, or
September to
maybe
March. Yeah.
yeah,
Yeah.
June is where you have a big thing next year, right?
Yeah. Yep.
Okay,
Let's go to the next one. So this is for the Dale special. This is the 1968 analog. And let's go through these. It is, like I said, uncanny. Remember when I said a sitting president not running is a rare occurrence? I think it's
yeah,
happened 4 times in the history of our country. In
yeah,
1968, LBJ didn't run.
yeah,
Present day, Joe Biden doesn't run.
right.
Um, RFK challenged the sitting president in 1968 for the nomination. Today, RFK Jr.
Yeah,
was challenging the sitting president for that nomination. He got sort of blocked out by the pretty well by the party, but he tried. Um, Humphrey, who was
yes,
LBJ's vice president, was the establishment pick. Harris, who is
interesting.
Biden's VP, is the establishment pick. Nixon, who was the Republican nominee, had lost his previous 2 national elections. He ran for governor of California, and he ran or statewide, and then he lost the presidency to Kennedy in 1960. Trump lost his last election against Biden. There was a third party candidate in 1968, George Wallace. We have a third party candidate in present day, RFK Jr. There was social unrest and protests. Obviously, we have the same thing. There was a very unpopular war called the War in Vietnam. We have 2 unpopular wars now that people are protesting, Ukraine and Gaza. This one blew me away. When I saw this, I said, holy moly. A major protest site in 1968 was at Columbia University, where the students took over 5 buildings and controlled them. What happened a couple months ago at Columbia?
Yeah, it must be the water.
It's the exact same thing.
Something in the water there, buddy.
I don't know, but it's same year, same thing. Assassinations. Unfortunately, Martin Luther King, Robert Kennedy were both assassinated in 1968. We've had an attempt on Trump's life already this year. You mentioned it. Chicago was the site of the Democratic Convention. Chicago is the site of the Democratic Convention. And here's another one. What's the chances of it? Election day, 1968 was November 5th. Present day, election day is November 5th.
Huh.
Not only do these events point to it, but my cycle work says we are repeating this 68 period right now. And the riots in Chicago outside of the convention. What I recommend for everyone is if you have a chance on the streaming service Max on CNN, they have a documentary series called 1968. Watch it.
Oh, cool.
It'll make you shiver because of the contrasts with how close things are and events are repeating from 1968 to today. So watch that if you have a chance. Um, I knew you'd like this one, Dale, because it's just really uncanny how these things are happening.
Yeah, I was, looking forward to getting my driver's license in
Yeah,
'68. So, okay,
there we go.
'68 Extreme.
Let's talk about the opportunities now in the markets. We want to sell risk. We want to look at some epic cycle plays, buy hard assets. I'll highlight energy and a soft. Then we're going to look at the dollar and bonds. Remember, I was bearish on bonds and bullish on the dollar, and both of those have flipped. So let's take a look why. Here's the ES Weekly. Um, on your last interview with you, Dale, I was calling for a July high. We got it. I think
Yeah,
we're going to
I
get,
took it.
yeah, I think we're going to get in September, and it may end up being some sort of false break high in late August, early September. So we're in the zone now. Why I said the roller coaster's at the top. We're in the zone where I think we're going to top out and start heading lower. And
Yeah.
I don't know what the events or triggers or the reasoning's going to be. Maybe this is echoes
How
to
about your war cycle kicking in, and
could
that
be the
being the
war
reason?
could be the war cycle. I think that's a big possible reason.
I mean, I think everything's cocked and loaded, and there's no ceasefire deal.
No, it's time to watch the technicals, right? The news isn't going to help you, but if you watch the technicals in the market, it'll guide you. We'll see, as I said, either a false break high or a lower high comes in and we
Yeah.
reverse, and that's the one you hit.
Okay.
I think the NQs are vulnerable. That's where the big excess was.
Right.
So this market,
The Mag 7 looked worse than even the Nasdaq 100.
yeah.
There most of the Mag 7s. There's a few that might make new highs, like Meta, but it's going to be a three drive formation.
Mhm.
So, Amazon's not making new highs. Okay, there are some that are rallying with the market unless we have a melt up. Could we have a melt up to 6, 7,000?
I think six is probable.
Okay,
It's there if they get aggressive.
yeah,
But
okay,
again, we want to watch if we do push up into some kind of high, watch the technicals. Watch for divergences, watch for the three drives like Dale teaches, because those are going to be the tells that the big boys are going to use the rally to get out.
Can we use the low, the flash crash low as the marginal line? You should not be long under the low we put in this month.
I would definitely say that's true.
Okay,
Because the worst case scenario, you do an ABC. Best case scenario, you might catch a three on the way down, which is
yeah,
huge.
yeah,
All
okay,
right, let's
well,
go to let's go to
nice.
some epic cycle plays. I heard you guys talking about gold, and I agree with you. I think you can't buy it up on stilts. But look, we could correct all the way down to this 2100 area right in here and still be super bullish.
Yeah, I don't think it would get there, but boy, there might be one more bus stop to buy the stuff. Even the miners are acting good now.
Just
So
watch your technicals,
yeah,
buy it on pullback into support that holds because as confidence erodes, gold does better. And I think we're in a period where that's going to be the lack of confidence is in a bull market. Silver, I think, is similar. I mean, look at this nice check back on a monthly basis we got this month, right? Right there.
yeah,
I think, $50 silver is possible on this run. And if
okay,
things really get going and it breaks out over those, 2011 highs, this thing could really, really move.
okay,
Here's one for the crypto guys. Bitcoin.
yeah, 100K,
I think so.
okay,
It's
41st,
yeah, it's been really bugging people, with
yeah,
this
there's a
sideways movement.
consolidation, yeah,
But look at what it did, Dale. I mean,
it's
basically
healthy, it's a flag, right?
it's a flag right on top of in
Yeah,
the area of the previous highs.
yeah, okay,
So and again, it's a anti-system sort of thing.
all right,
Let's look at crude.
You know, I'm trying it here with a reverse stop under 72
on
because we're
crude.
good or bad from here.
Yeah, I think you're right. I mean, and you know this, Dale, and you and Blake and everybody, you're so seasoned, you understand this. A lot of times, especially in commodities, a market will make one move in a direction to clean out stops, and then
Right.
it turns and makes the real move it was doing.
Yeah.
And you look in crude, crude does it all the time.
That's war in the Middle East, that white line up there.
Yeah, that's right. But
Because
look
there's
at the
going to
look
be a
at
supply disruption because Europe is slipping back into recession. I mean, where's the demand? So it's not going to be demand driven. It's got to be a supply shock.
right. I
So
mean, look at this triangle. That's building up energy for the move.
okay,
And here's
nice.
an example of what when it takes out the lows, right? Look,
Oh well, we did that Monday in the currencies. Aussie it flushed out. It was a lot of stop hunts that day.
absolutely. And the commodities
What did you
love to
think when
do
you
that.
saw VIX trade 60, man? What were you thinking to yourself when you saw the VIX do that?
I was like, wow, that is some speed to get to 60. But I didn't think it what I did is I started looking at what other assets were doing. And when bonds stopped getting bid, I said, okay, that's not going to last. The VIX is coming off, right? The
But I mean,
panic,
just the magnitude of the move for
oh,
such a small move in other
colossal,
markets,
colossal.
is that a sign of market dysfunction?
I think it's a sign of it, yes, and a hair trigger, right? Everybody is like has one foot out the exit right now, waiting for the whatever shoe they think is
Yeah,
going to
there's
drop.
something weird. I don't know.
And I think that's
Something.
what these triangles are telling us, right? There's this indecision and this concern, and you know, this is a monthly triangle winding up,
Yeah. Okay.
ready for a big move. Here's natural gas, monthly
Yeah.
triangle.
It's been trying for a long time.
I know if you look at this though, look at the value level this has shown
Yeah.
throughout the
Yeah.
years.
Great point. You just have to be
So
patient
wait for the break, right? Wait for the break and then
or
buy
just
it.
be patient, you know.
Yep. Coffee. Here's one. I don't know what's going on with the coffee crop, but we broke out of the triangle and now we're,
Yeah.
we're
That looks
trying to
pretty
to
good.
break out
Yeah.
here. Really
Yeah.
nice monthly
Might have
pattern.
pull a cocoa.
It could.
Uh,
Let's get to the dollar. So here's the dollar. This is the triangle, right? I thought, okay, we're in this triangle and we're going to break up because it was like on support. But what the couple things to look at here are the there's an ABC target at 99.83, which is at your par level, right? Right at your par level. And the half square here, which could act as support, is at like right at night, right around 98.
that's one of my targets, 97, 98.
Yep.
Where's the
So
bottom one?
the bottom one's probably around, I
The
can't,
bottom blue line.
oh, the trend line, that's
Yeah,
probably
yeah.
around 94, 95, something like
Oh,
that.
that is. How about the lower trend line?
I don't know. I can't see that
Oh,
one.
okay.
I can't see that on the
All
chart.
right.
But
Well, that's
so
where it's going.
it's possible. Absolutely. Listen, we broke out of that triangle, so it's
Yeah,
bearish.
yeah.
If
It's
it if it
bearish.
pulls back to this triangle and can't get above the apex, you
Yeah,
sell the hell out of it.
yeah.
Until it proves that okay, it's just an ABCD or it's a false break and reverses, you got it. You got to sell it.
I think this is important, Ben. I don't know how you look at it, but uh, any nation whose currency is, at the beginning doesn't look bad, but it could end up looking pretty ugly. It's not a vote of confidence for the U.S.
No, and you know what, Dale? What dawned on me again, getting back to this sort of paper to hard assets thing, is the dollar was the safe haven, right? Everyone went to the
Yeah,
dollar when things got rough. Maybe
right.
they're not
That's
going to the dollar now. Maybe they're going
no
to gold, silver, or
Aussie, Canadian commodity
maybe,
currencies.
maybe they're going to commodity currencies or things
Very
that are
bullish
backed
camp.
by hard
Yeah,
assets. So
yeah,
that's
yeah,
what this could be telling us, this breakdown.
yeah.
Here's
And maybe
bonds,
yeah, okay. So where's that line come in? 120 up above it?
132 and a half.
Wow. Okay.
That's where the ABCD target is.
Yeah.
You can see
Okay.
we were in this little triangle. I told you a
Right.
lot of these markets were triangulating. We broke out. So I think we're heading potentially to one, bonds are rallying here.
Yeah.
At which time, let's say we fail there, it's a hell of a sell.
Yeah. Okay.
And longer
I was
term, if we
on it.
get the inflation, it probably is going to be a sell.
Yeah.
And that's it. That's
I
it
think
for
you're smart.
there's our little channel. People can check us out. We do a weekly video. Um, and if you want to follow me or reach me or see what my stuff is, there's the Twitter handle.
You know what, Ben? I have one more analog for 1968.
What's that?
You ever hear of a band called the Hands of Time?
No.
Okay. Well, the Hands of Time was a band formed in at Niles North High School.
Hmm.
And one of their biggest cover songs that they did was from that year, right around 1968.
Wow. I'm
Well,
telling
you
you that
talk about my baby. Yeah, she come around about 5'4" from her head to the ground. Well, she come around here just about midnight. She make me feel so good. She make me feel all right. And her name is G. L. You get the picture. That's my
nice.
sister's name. Anyway, on 1968, we've come back from the time machine.
Let me tell you though, your voice is strong today, my friend. Strong.
Anyway, I'm rocking here at 6:10 a.m. what a career. Anyway, Ben, you know, I consider you a friend, and you've been coming here, and we've been watching things unfold. How you ever came across the Epoch Cycle and finding all these market analogs. Great work. I know you didn't just read a book about the Epoch Cycle and then put it together. So all the good analysts I know are relentless workers, and because it's not work, they enjoy looking into things and trying to prepare people and be a watchman. So you're actually a watchman for people, because the messages that you're giving them give them things to think about and possibly things to do, actionable things to do to prepare themselves for, the fourth turning.
Yeah.
So want to thank you for doing that for us here at in Face.
My pleasure, Dale. And you said it at the beginning of today's show. You said you got to have curiosity because it all starts with being curious. If
Yeah.
you want to find out about things, it starts with having that innate sense of curiosity. Like, okay, why is that? How does that work?
Someone
And
just said in 1968 the market peaked in November. I don't think it'll last that long.
I don't
But
either.
anyway, and there is maximum sunspot activity that Patrick has been bringing up. We're like
Interesting.
at maximums, which is,
What does
kind
that
of like
do?
the it increases activity. It's usually bullish for the market. When the solar activity is slow and the sun is inactive, is usually when you start to have more depressed, slower economic growth, lower
Mhm.
activity, less electrons causing things to, you know, act volatile and out of sync. So when the sun calms down, the market will calm down. And anyway, that's all I know about the solar cycles. Some people live by like you live by the epoch cycle. They forecast off sunspots.
Right.
Okay, especially agricultural markets. Because they could pretend weather changes too. Um, that's it, bro. What a great interview. Uh, this is a good one. Let's get it out there and have as many people as possible view it and get ready. okay, for whatever is coming. And you and I will be talking after the flag fractures in November.
Yeah. And
That'll
remember,
be
remember everybody,
interesting.
let's leave on a positive note.
Oh,
Daylight,
don't ruin it. Don't ruin it with anything positive,
daylight
man.
follows darkness. So it will get better after we go through the dark period. We just have to
Beautiful.
get through it. That's all.
There may be weeping in the evening and through the night, but there will be joy in the morning.
There you go.
All right, everyone. Rejoice. Today's a good day. All right, everyone. Have hey, you only have a minute to get to the morning edge. And I had a great time talking to Ben. Hope you enjoyed it. It's recorded. You could do it again and read it. Yeah, read the video. Anyway, Ben, I had a great time, buddy.
Thanks, Dale. Always the best spending time with you.
Follow Ben on X at his name at Ben with 2 N's, Maldonado, and check out his videos. Should be part of everyone's intelligence gathering. All right, everyone. Adios. Don't just count your cycles, count your blessings. I'll see you later.
Take care.
Adios. You too, Ben.
Bye.
Bye.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.